about that. How do you include innovators finance to Islamic banks, to participation banks, and equity finance in general? How can we do that? Maybe in the second round I can talk about those. But so far so good, and thank you for this event.
Thank you very much.
With your permission,
Dr. Ali, please.
With your permission, I take this opportunity really to thank Turkey during its presidency for G20. They made a lot of initiative, which really including the Islamic banking. And really, I want to appeal that we can utilize and get the benefit of the newly created global platform for the world SMEs, which has been initiated really by Turkey at the presidency. And I think this is very important for us to benefit from it and to thank Turkey to continue that. Also, we call on all our member countries in G20, Turkey, Saudi Arabia, and Indonesia, to really continue this initiative started by Turkey. Thank you.
Thank you very much. I'm going to ask one question, and then I think we may have to have a slight change of plan, which I'll come back to in a moment. But the question I wanted to ask is that one of the issues that was raised by the managing director, and also it's been raised more recently, is this issue of the tax treatment of debt, or what is actually risk sharing. To what extent is this still an impediment in countries from your perspective, and do you see this as something that can be taken care of? And maybe I'll start with Governor Al-Mubarak, because in a way, from your point of view, you have a long experience of this. Do you see this as an impediment?
Not in my country, there is no tax.
So there is equal treatment for all.
Not yet. Not yet, at least. No, I think I won't even want to go more further in this, where we not only expect countries to reduce taxes on this type of financing, especially for SMEs, but to even offer support and incentives. For example, as I said earlier, the kafala offers 80% coverage to the losses in order to incentivize financial institutions to continue lending to SMEs. There are programs, and I think there's one also in Turkey, which is lending for funding, or funding for lending, sorry, where government would offer a certain amount of money to financial institutions only to be lent to SMEs at lower rates, where the government does not make money on those funds. So I think whether it is reducing taxes or guaranteeing a certain percentage of the losses or offering some subsidies to SMEs, these are all very important in order to jumpstart. Financial inclusion will get the individual to be banked. Once they are banked, they become entrepreneurs. Once they become entrepreneurs, that's small businesses. We need to help them finance their initial business. Then they become middle-sized, and that's how the economies grow and jobs are created.
Thank you, Fahad. I think His Excellency, the Minister of Finance of Kuwait may have to leave us now, I understand, to go to the meeting that's just been scheduled with the Emir. So, I don't know whether before you leave, you have any final word that you want to share before you go?
Well, Masood, I would like to conclude by thanking you and the Central Bank and IMF and everybody here. You're most welcome into Kuwait. I would like to sit and learn more from the experts we see here, and it's important for us that we continue to host and foster the Islamic financial growth in Kuwait, and we think such events and such meetings would definitely help guide us in a best manner and in best international practice to incubate such large growing interest in such financial instruments. So thank you, and I welcome everybody here into Kuwait, and please excuse me.
Thank you very much, Aras. So I think we can continue with our panel discussion, but without the benefit of the ministers participation for the remainder of this. Now, I do want to come on the same topic of the taxation, and perhaps I'll come to you, Minister, first. Yeah.
Well, thank you. Let me wear my other hat, professional hat, of a chartered accountant, and put the finance minister hat aside. I see no implication on tax side. Reason being, what impediments are possible? What you call interest in the conventional banking system and a cost, which is deductible as an expense, would now take a shape either of a markup under Musharka, Muraba, different facilities, and should be allowable if there is, I'm talking now domestic and international. If there are domestic laws which do not permit any as an admissible expense, I think those can be tweaked and should not be difficult at all. On the international level, there are obviously the avoidance of double taxation treaties, and I think if there is any reform required, I'm sure there would be no. But the core issue is, what is the difference between a conventional banking transaction and same transaction being done under Islamic finance? Is basically risk sharing based. There has to be a cost at the end of the day in lieu of the interest, which should be admissible. If it is a profit, obviously then it goes straight to the, so I personally frankly see that the tax impediments, so to say, can easily be handled both at domestic as well as international level.
Okay, Governor Bass, is there anything to say on this?
On this particular issue, actually, the Turkish presidency asked the FSB, the Financial Stability Board, to work with other international organizations and to prepare an initial diagnostic report on what are the factors that shape the incentives for more debt and less equity. This is mostly for non-bank corporate sector. And tax treatment has been identified as one of them. There are other aspects, of course, but the tax treatment clearly impacts the leverage decision. So there is more leverage with tax deductibility on interest and no tax deductibility on returns on equity. So therefore, they have also looked into the practices. A few countries actually in the world have equated the two, not by eliminating the tax deductibility of interest, but by eliminating equal incentives, deductibility incentives for equity capital. And Turkey joined the club recently. We have, for publicly traded large corporations, we have 100% tax deductibility for additional paid-in capital based on a notional income of that. So that really would reduce the distortion that we have in there. Right. But I would recommend the reports are out. They are also available under the G20 website. And the best report, I think, on this particular issue is the joint report by the IMF and the OECD regarding the theory and practice of this.
As I think you pointed out, and as Minister Dar pointed out, in a way, I don't think that the conceptual issue is that complicated, because for the reason that you laid out, you can try and figure out what the equivalence would be. But the practice around many countries is such that it still does not provide an equal level playing field across the two. And the question, I think, for national authorities, and particularly for the tax authorities in countries, is how far and how quickly they can move to try and address some of these inequities that come from differential tax treatment across the two kinds. And I think that's what Governor Bashir was pointing out as well in the case of Turkey. So one issue was that. Another issue I wanted to come to, which was raised earlier on, and which Dr. Ahmed Mohamed Ali also raised, which was this issue of the capacity of the financial infrastructure in the Islamic finance industry, in particular credit bureaus, the capacity of staff. How far is this an impediment still, and are there ways in which we can help to accelerate the development of capacity in this industry to try and overcome some of the problems? And this applies particularly to the small enterprises, because it's, many small enterprises trying to set up the credit evaluation of them would be facilitated if you had more effective mechanisms for this. So on that front, maybe I'll come back to Governor Mubarak, because there is a lot of experience on this in Saudi Arabia as well.
Well, yes, I fully agree with you. I think we are celebrating the growth of Islamic banking and finance. However, there is a lot of work in building the human capital, the regulatory environment, and the enforcement. And I think our main speakers this morning have explained that very clearly. For SMEs, which I think are extremely important for any economy, especially our emerging economies, a holistic approach, an integrated one, need to be developed for SMEs, where we need to understand and analyze how can we collectively, from government to educational institutions to financial institutions, work together to develop the infrastructure. And the infrastructure is a very clear guidance. And I think the Islamic Financial Services Board does a great job in helping us adopt the financial standards to Sharia compliant and offer guidance in that area, and also in the accounting area. Domestically, in each country, I think we need to further develop the regulations, and especially the enforcement. The enforcement is extremely important to protect the rights of all parties. Otherwise, the risk will be much higher than the return, and financial institutions will go away from this business, and this will be very dramatic for our systems. Valuation agents are extremely very important. As we are saying, it is equity-based, so there's always an underlying real estate or property or any form of assets, and proper valuation in order to determine the LTV, loan to value, is extremely important and need to be done. In Saudi Arabia, just a couple of weeks ago, we passed a law to create for the first time the small to medium size enterprises authority. One single authority that will take care of everything and work with all agencies to focus the efforts in promoting and developing those. Education is extremely important, and it should start from business schools and continuous training from our training institutions in order to build capacity. But also it is important that financial institutions train people internally from their own staff and encourage them and incentivize them. This type of business is not a very attractive one. Usually it is sometimes seen or perceived as high risk and low return, and therefore people or professionals are not attracted. Banks and financial institutions need to find ways to incentivize the human capital to be attracted to this kind of business. I think once we have this collective ecosystem, then we'll be able to further promote SMEs.
Thank you very much, Bud. I think that's really helpful to give us a sense of the areas in which that capacity development will help to advance the industry. I just want to get a little bit of a sense of how that resonates with the experience of other countries, and then I'm going to come to Dr. Ahmed Mohammed Ali also for the technical assistance and capacity building work in this area that IDB has been doing, and what lessons you've been drawing from that. But before that, let me ask Senator Dar, please.
Well, I think there is no two questions about that. What we need is more skilled and well-trained human resource. Otherwise, the industry cannot utilize its true potential. So the capacity constraints or capacity building, I think that is a core issue, and we should be establishing in our countries the centers of excellence in order to focus on the Islamic banking and its different aspects. We have in Pakistan already established centers of excellence in order to parallel go on working on this thing. But I fully endorse Governor Saudi Arabia's thinking, and Dr. Ahmed Mohammed, as he said, and so did the earlier speakers, that one of the major impediments is also the capacity to handle the business, which has a great growth potential, Mr. Masood.
Thank you. Anything from Turkey, Erdoğan, that you wanted to add?
Yes. If you look at from the point of view of a potential innovator, potential entrepreneur, a young college graduate who has an idea but no money, so is the system favoring him to contribute to growth and to innovate some ideas and either some product innovation or process innovation, or is he not able to do it? So there, basically, there are lots of problems, because a full developed credit registry would not be enough to solve his problem, because he has no credit history. He has no collateral to borrow money. So there has to be some institutional form to support that, and I think the United States has capital markets developed enough to be able to do it. So these are starting with business angels, and then either private equity or venture capitalists, and then that model seems to be more viable. So can we, the big question is, can we have the participation banks, Islamic banks, to have such similar structures on their asset side? Some windows for really allowing finance of innovation for these people. The answer right now is unfortunately no, but we should all think about such progress, institutional capacity building for those inclusion of these innovators.
Thank you very much, Governor. So then let me turn to Dr. Ahmed Mohamed Ali, and get a little bit of a sense also of what lessons you've drawn from the support that IDB has been providing over the years in this area.
Yes, as you know, of course, as everybody knows, human resources are really the backbone for any entity, for any institution. Islamic Development Bank, from the beginning, established IRTI, the Islamic Research and Training Institute. And IRTI is cooperating with universities, training centers, but this is not enough. So really, we want more efforts. We want to call on the academicians, the universities, all of them we need to together in order we can build the required human being for the industry. And most of the people available, they have been trained in the normal banking. But what we need to train special people and to meet the real needs of the Islamic banking industry. So really, we want to take this opportunity to call upon all the training institutions, academicians, in order we can put our hand together to provide the required human resources for the industry. Yes.
Thank you. I want to move finally to another area, which is this area of the impact of technology. We spend lots of time nowadays looking at new developments in technology and how they might change our lives. And I think it's worth thinking also about how they are impacting the industry in terms of Islamic finance, what they offer in terms of potential, in terms of opportunities to reduce costs, and what they also bring in terms of additional risks that we need to be able to monitor. And I wanted to get a little bit of a sense of that from all of you as to how you see the potential of technology as it impacts this industry. Is that on balance going to accelerate it? And is that, or are you more worried about the risks that it brings? So let me start with Governor Mubarak on that.
Thank you. I think this is definitely one of the most important catalysts for financial inclusion, both individuals as well as SMEs. And we pride ourselves in Saudi Arabia to be pioneers in this area. And since 1985, we started our electronic systems and electronic settlements. And since then, we developed many applications. We believe this brings down the cost for individuals and will have far reach to different parts of a very large country like that of Saudi Arabia. And you don't have to have those fancy branches in everywhere. You could reach them by electronic means. And this also includes mobile banking. And in Saudi Arabia, we developed point of sale where now it has been growing at, in terms of value, of 22% since 2005. ATM machines are all over the country at a growth of 13%, even though we are not really encouraging more ATMs in terms of cash disbursement, but in terms of doing electronic transactions, paying bills, and so on to go on to the ATM machine. We have developed also Sadad, where large builders such as telecom, electric companies can collect their bills. However, what is more important is now we are finishing a very important, very large project for small bureaus that is suitable for the SMEs in order for them to sell across the country and be able to collect electronically at a very low cost. The penetration is increasing for both point of sale and a full program is in place in order to reduce cash in the society and increase electronic transaction across all sectors in the business as well as in the society. For example, the non-cash transactions increased from 4% in 2006 to over 15% in 2014. And we expect in about 2020, the number of transactions electronically will be far more than that on the ATM, and we will reduce the cash utilization. Having those means brings the cost, have far reach, and will help further inclusion of both individuals and offer easier way to conduct business for SMEs.
Thank you, Governor. And do you worry about any particular new risks that the technology brings, or you think they are so far manageable?
Risks always exist with electronic payment, and this is a continuous process for cyber attacks and any harmful viruses to the system, but that does not mean that we stop using it. We should continue building firewalls and protect and educate, and we should be ahead of the invaders into those systems, but it is extremely important and essential to make those systems protected and available for all segments of society.
Thank you. Minister Dar.
Well, before I touch technology, my brother from Turkey has talked about the collection in the earlier discourse. I personally believe that, there's a welcome news that through Ijtihad and these great scholars, there used to be time when the Islamic products could not be devised, and you could not have even sovereign borrowing without having an underlying existing asset. Now, through the process of evolution, now even a future asset which is to be constructed or built or acquired, the sukuk or the underlying asset can be, the Islamic financing is available. So I think this is a very welcome evolutionary development in that. So I just wanted to add on to my brother's earlier comment. Coming to technology, I personally believe that technology is not going to be a blocker, but it's going to be a facilitator, and it's going to be an enabler, because it will help you in financial inclusion, the particular subject of this session. Technology, yes, my brother from Governor of Saudi Arabia, he's very right. The issue of cyber crimes and cyber security is there. The world is right now deliberating on cyber security and cyber crimes, how to handle it, but that should not, make us to be shy. technology is must, and it's going to be enabler and facilitator. Let me say, in my opinion, I may be wrong, I believe that if what Madam Lagarde closed on, that it has to be sustainable, inclusive growth. It's simply not possible without financial inclusion and technology inclusion, in my opinion. So you've got to have financial inclusion and technology inclusion. Only then it will lead to sustainable and inclusive growth, which is obviously our belief and the goal.
Thank you very much. And let me come to Dr.
Really, in my opinion, in order to benefit from the technology, we have to have our own research for the needs of the Islamic banking industry and how to benefit from all new technology. We should encourage innovation and research in our institution. This is very important, and I hope that the structural institutions who are working for the industry to come together really and enhance and encourage innovation through research.
Thank you. Governor Bash.
I can give you a conceptual and broad answer to this. I remember a paper by Professor Bent Holmström of the Massachusetts Institute of Technology. So he has this nice analogy. A debt contract is like a bicycle. An equity contract is like a Formula One race car. So debt contract is very easy, very simple. And the whole point is to minimize monitoring costs. You have a collateral, and based on that collateral, you ask no questions, you do no monitoring, and that's very simple, very easy. You go to where you want by a bicycle. Formula One race car is very expensive in terms of informational investments, informational requirements. You have to reduce the asymmetric information. You have to reduce moral hazard, adverse selection type of problems. And all of these would benefit from technology. I heard one example in one of the World Economic Forum meetings in agricultural finance. So in the past, verification of bad states of nature was difficult, but now there is satellite technology. So insurance companies, private insurance companies, can immediately verify from satellites that there has been a disaster, there has been a problem with agricultural production factors outside the control of the borrower. So then they can immediately send the check to compensate for that loss. So private sector now can do it without need for government's efforts. So we can use technology to reduce monitoring costs and costs related to asymmetric information. That would be quite helpful for profit loss sharing type of contracts. Thank you.
Thank you. So when you were using that analogy of a debt contract being a bicycle and an equity contract being a Formula One racing car, I was thinking in my mind as to, in that case, you know, what is the Islamic finance which combines elements of debt and equity and risk sharing? So I suppose it's like a Volvo, a safe family car, rather somewhere between the two. So before we end, let me just ask if our panelists have any final thoughts that they want to share on this topic before we go to the next panel. So let me ask Governor Al-Mubarak.
Well, I think much been said, but my final remark is that I consider financial inclusion is extremely important for our economies, both for individuals who have missed out, we need to include them, and for the SMEs to promote them. This is essential and important. Sharia-compliant products offer the right opportunity to even enhance the inclusion in many ways. It offers the right products that people feel comfortable with, and it is safe for financial institutions to offer. Therefore, we should not just be talking about it in conferences like this, but we should convert it to specific plans with KPIs and try to achieve. And the OECD have done a great job in putting a survey to examine how much inclusion you have done in your society, how much financial literacy have you spread in your society, and how much financial protection to financial consumer protection to the financial institution customers you have provided. Those are extremely important elements, should not be just made as general statement, but should be converted to action plan, and financial institutions carry a huge burden in participating in promoting and enhancing financial inclusion and financial literacy. Thank you.
Thank you very much, Governor. Mr.
Well, endorsing what my brother has said, I think it should be our goal to do with as much speed as possible to reach out the underserved and unserved population of our countries through the financial inclusion, and that's the only way you can reach out to them. And as I said earlier, financial inclusion together with technology inclusion will lead us to sustainable and inclusive growth. Thank you.
Governor Bashir, then I'll have the last word for Dr.
I mean, we should be really quite happy with a convergence that we observe right now. The convergence is between normative finance and positive finance. So if you go back to history and look at the usury laws of Christianity or Judaism, mainly the focus was on the level of interest rates. Too high interest rates were named as usury. Right now, we don't have that problem. We have extremely low interest rates. So in that sense, normative and positive finance has converged on that. But regarding the nature of the contract of finance, Islam has been more careful regarding if you have an obligation, fulfill your obligation. If the debtor is in difficulty, give him some time. If you forgive, it would be better for you. So these are all related to the nature of the contract. If it is a fixed income contract, what are the principles behind it? There has been a lot of convergence between these normative ideals and the positive realizations. Especially the most recent TLAC, Managing Director Madame Lagarde mentioned that total loss absorption capacity, high loss absorption requirements for the insurance sector. These are really making convergence faster, and probably we will in the future have very similar normative and positive infrastructure and developments in finance. Thank you.
Thank you very much. And then finally, let me turn to Dr. Ahmed Muhammad Ali.
Thank you very much. First of all, really, I want to once again express our thanks for hosting this very important conference. And I suggest, as an outcome of the conference, to have a task force to work ways and means how Islamic banking institutions can be more active in financing small and medium institutions, entrepreneurs. And I think the statement of the governor of Central Bank of Kuwait, we could use it as a working paper for this purpose. So we can come out with specific results, inshallah, for the industry. Thank you very much.
Thank you very much, and thank you for that specific proposal. I think that Governor Mubarak summed it up quite nicely by saying that, in a way, there's no doubt that if you look by any statistic in our region, we have a problem with access to finance, both at the level of households and at the level of businesses. All the surveys that are done of impediments to doing business in our region cite access to finance as a higher problem than in many other regions. And at the household level, some of the numbers that were cited today show you how few people are able to access financial institutions and take advantage of them. So really, perhaps inclusion sounds like a big word, but really what we're talking about is providing to the vast majority of people in our own societies enough access to financial services to be able to get on and improve their lives. So we have established, I think, unambiguously that there is a case for moving forward. We've also established that there is a need to go beyond simply identifying the issue and the problem to taking country by country, developing plans which have well-targeted milestones and providing support for it. Now I think we have to move to a panel which is going to look at what is the regulatory and supervisory framework that enables us to achieve this while still maintaining financial stability and not risking managing the risks that come with it. So I know there have been some people in the audience who have wanted to ask questions, but I'm afraid we don't really have the opportunity to open it up now. We need to bring this to a close to move on to the next panel. So with forgiveness for those, I do want to bring this session to a close, thank the panelists, and invite you all to join me in thanking them.
Gentlemen, thank you very much indeed. If everyone could remain in their seats, we are going to start with the next session shortly. Just give us a few minutes to change the names around, and then we will continue with strengthening regulation and supervision to foster stability. Thank you.